Hey guys, welcome back to the channel, best place for long-term stock investors. Today, we are going to talk about the ringgit. More specifically, why it's happening, how you can invest during this sort of depreciation, and the most important thing is how you should respond to this sort of mini crisis or full-blown crisis. So as usual, before we begin, important to know that now what we say should be taken as financial advice. If you want that sort of advice, please speak to a professional. Oh yeah, one more thing. Just to be absolutely clear, I do not own any of the stocks mentioned on the slides. And also guys, one more thing, if you didn't know, we have a totally free masterclass for you on how you can build a 6 to 7 figure portfolio through the power of stock investing. Link to register in the comment section or the description. Alright guys, so let's start with a description of what is happening and then why. So if you didn't know, right, the ringgit is depreciating. It has depreciated 8% against the US dollar. Normally we compare it to the US dollar. At least over the past year, obviously very painful for a lot of Malaysians. Now, I think, in my view, Malaysians tend to overreact a little bit. And I think it's important to have perspective. So what do I mean by that? It's not enough to compare our currency to the US dollar. Important, but not the only thing we should do. Maybe not even just the US dollar and Sing dollar. You want to compare with all the other economies, whether it's our neighbors and the major economies. Now, if you look at what's in front of you right now, you can see that Malaysia has only depreciated against the Sing dollar and the US dollars for reasons that I'll go into later on. But when you compare it to major currencies, right, like the euro, the Great British Pound, Japan, and even the Chinese yuan, we've actually done better than them, which only means that these other countries have depreciated a lot more than the US dollar. So that's something to take note of. And of course, when compared to some of our neighbors, we have done better than others, we have done worse than others. So it's important to have this perspective because we like to think that when the ringgit is depreciating a lot, then we think that, the world is going to end, the economy is going to crumble, when really we are actually above average when it comes to performing against the US dollar. Now, why is that the case? Why is the ringgit depreciating? Now, of course, there are many reasons people can attribute, but I think one of the biggest ones is definitely the interest rates. So now, how does this actually work? Very simple. When a country increases the interest rates, all else being equal, now the key is all else being equal, the price of that money, right, the interest you can get out of that money goes higher, and so the demand should be higher, right? You would prefer something that is giving you 2% versus something that's giving you 1%. Now, with that, if you can look at the US dollar, in 2022 alone, they have raised interest rates from 0.25 to 2.5%. That is a 10x increase, by far the largest. If you look at the Malaysian ringgit, it is by far the lowest. It has only grown by 1.4% from 1.4x, growing from 1.75% to 2.5%. Sing dollar is up 5 times. Great British Pound is up 7 times. The euro, well, it went from 0 to 1.25%, so I guess you can say they are the highest. But why have they not performed better than US dollars? Because remember, as I said earlier on, it is based on all else being equal. What is not being equal in reality is that the Eurozone is not doing as well economically as the US dollar, and is actually not doing as well as a lot of other countries, including ours. However, the Japanese yen, right, is the craziest one. They are doing absolutely nothing. They are something like 0% or negative 0.1% interest rates. So when you look into context, Malaysia hasn't really raised interest rates as fast. Now, the question you ask is, well, should Malaysia follow suit? Well, in a way, Malaysia can preserve its, old US dollar, MYR currency exchange to $4 or even lower by increasing the the interest rates to 17.5%, right? 10x, just like the US. But is that something that Malaysians actually want? Do Malaysians actually want to pay 17.5% on their housing loans? Actually, it will be a bit higher than 17.5%, but let's just keep it simple. then your car, maybe you have to pay 20% interest. Credit cards, 40% interest. So, sometimes we have to think, right? Like whether it's actually realistic for us to also raise interest rates on the level of other countries. So that's something to think about. And another one is also, inflation, right? One of the reasons why interest rates are going up for the US is because the Federal Reserve is trying to combat inflation. And so you have to ask yourself as a Malaysian, is not what is the past interest rates, what are the rate hikes that are coming, but how about the rate hikes in the future? Now, of course, the Federal Reserve looks at many, many different things, but one thing they definitely look at is inflation. And one important component of inflation are commodities, because commodities affect things like your transportation costs, oil and all that, affects energy prices, or rather energy prices affects, inflation, again, like I said, oil, natural gas, things like that. Now, of course, food and, even lumber, right? That feeds into your housing inflation, iron as well. So when you look at, these four that I just brought out here, there's obviously a lot more. You can see that on a 6 months basis is actually declining. Now, does this mean that I think that the Federal Reserve will stop raising interest rates? Not necessarily. They may look at other factors, but I know that inflation is one big one. And if inflation starts to drop, then maybe they won't be raising interest rates as fast. And perhaps what the US government has done, or the US Federal Reserve has done right now, is slightly irrational because they've increased the interest rates so quickly, right? This has all sorts of repercussions, right? People with a lot of debt will face the issues, but that is a topic for another video. But the basic idea is that at least all the trends are showing that inflation will slow down, which will mean that the rate hikes won't go up as fast. But let me know what you think in the comments. I really want to know whether you agree with my analysis. Alright guys, if you're interested in working with us on a private one-on-one basis to improve your stock investing skills, we have the perfect solution for you. That is our Mentorship Program. You can actually apply it in the comment section or the description. Now, key thing is that not every one of you will hop into an interview. Only 20% of you ever get to be interviewed by us. And even if you actually hop on the program, it's an exclusive program. But if you're interested and if you're confident that you can qualify for it, go ahead and apply. Okay, so in the first segment, I talked a little bit about, what I think are driving interest rates and, how to set perspective when it comes to the Malaysian ringgit. Now, I want you guys to think about how you can actually navigate yourself in this sort of environment, right? Let's assume that the ringgit will continue to depreciate. What is the game plan? As you know, if you watch our previous videos on the ringgit, and maybe we can put it, up here, the video. You know that we always advocate, for those of you who are fearful of Malaysian ringgit depreciating, to invest in companies that have a good amount of exports as a percentage of their sales. So you can see in this year-to-date period, right, where the rate hikes have been happening and the ringgit has been falling, companies like Kawan Foods, right, they're in the F&B business. They do like wrap, roti prata, like roti chana, like that, and then they actually export it into other markets like Australia, things like that. 46% of them of their sales is exports, right? And you can see they've done very well, nearly 37% up as of the 9th of September. So really, really good. Another one is PMBTECH. They are into silicon. Silicon is really, really important when it comes to a lot of stuff in the world, right? Whether it's a building or whether it's even the semiconductor industry, things like that. Tech industry, 87% of their sales are actually exports. They are up 62% this year. So again, this is how you can protect yourself, right, from the ringgit depreciating. And just a last example, just to show you different, different industries, right? Coastal contracts, 97% of exports, they are into oil and gas. Won't get too much into it. They basically have a lot of sales coming from Mexico. So, and of course, whatever they're selling is usually received in US dollars. They are up 36% as well this year, at least. So this is roughly how you should prepare yourself, right, when it comes to protecting yourself from a ringgit depreciation. Now, there are important caveats, right, when you look to invest into export-based kind of companies. The first is obviously you want to understand the business. Because just because the company does exports doesn't mean that it's a great company, doesn't mean that the cash flows are consistent, the business is solid, the management is solid. So that's absolutely key, because even if the company has high export percentage of sales, if all these other things are bad, then it's not worth investing in. The second thing is you also must understand the business cycle. So even if the company, right, is really, really good, they may be at a period where the business cycle is doing bad. So even though they are doing exports, but if the exports start to decline as a result of the business cycle, then it's also a stock to avoid, at least temporarily, until the business cycle start to become a lot better for that specific business, right? Not the business cycle in general. And so, to give an example, right, gloves, right, they have a lot of export. Hartley exports to the US a lot. Top glove to many parts of the world. They earn a lot in US dollars. However, they are in a down cycle right now because of supply issues or supply overflow. And as a result, even though they are in an export-oriented sort of business, it has not been a good idea to invest in gloves, at least in the past year and a half. Now, going forward is a separate question. That's for you to decide. But just sharing you some of the caveats. Tech companies is another one. There's been a slowdown in semiconductor revenues. There's been a slowdown in Taiwanese companies as well. So as a result, the whole semiconductor companies, which a lot of our guys in Penang are linked to, are not so bullish, and they are in the negative end of the cycle. So again, they are also very export based, but that doesn't mean it's a good idea. These are important caveats that you need to know. As usual, guys, if you like this video, make sure to give it a like. Of course, comment if you think what we say makes sense or even doesn't make sense. We always accept criticism. And of course, last but not least, click on the subscribe button and the notification bell so that whenever we launch a new video, you know it right away. So what are some of the important general responses you should have, especially an emotional response you should have to this situation? I think the first thing is to not panic and to always see that a crisis is really an opportunity, right? Really just sitting there and just talking about it is really not going to help. You have to see it as an opportunity, and Malaysia is filled with examples that you can take advantage of to protect your money and grow it. Now, the second thing is, when you look at the USD MYR or the currency, right, exchange, important to know is that it is a lagging indicator, meaning it has already happened. And so you should not be stressing yourself over what has happened, but what do you think is actually likely going to happen in the future? Now, of course, you should always prepare yourself in both scenarios, when the ringgit appreciates and when the ringgit depreciates. Now, I already explained to you earlier on as to how you can prepare yourself assuming it depreciates. But we know that there is a good chance that the ringgit will strengthen, right? I still remember in 2017, we did hit the peak as well, I believe in February, where the exchange rate hit 4.5, which is what it is today, 4.49, something like that. And it depreciated all the way to 4.15, right? And people who were, cognizant enough to know that certain things are not sustainable, they were looking at companies that might gain during a strengthening, or at least avoid companies that would lose out during a strengthening. So key example would be a lot of people, smart investors that I know, stopped investing in the furniture industry, right? Because the furniture industry has a lot of US dollar exports, and then their cost also is in US dollars sometimes. So that when it strengthens, then it's not so good. Now, you need to look forward. Right? You need to look forward. And you need to assess, right? Don't think that what has happened will continue happening, right? And that's obviously difficult because when you read the news, when you're on Facebook and all that, people are always talking about what has happened and thinking that will keep going on forever. Don't be that sort of investor. As I say, link to number one, complaining is really not a strategy, right? You have to just objectively and even unemotionally see it as what it is. It's just a number. And go out and find investments that you feel can protect yourself. Also, as a last bit, ask yourself: is what the US doing rational, right? Are they increasing interest rates at such a pace something to applaud or something to be skeptical of? Now, my view is that a lot of this is unsustainable because there's a huge cost for doing this. A lot of Americans are in debt, and this will be very, very potentially tragic situation. They might be doing it too fast, but that's just my point of view. Always interested to know what is yours in the comments. Now, going back to this, it is important for you to ask is because, again, similar to point number 2, if you are only looking at the interest rates and what happened, you are focusing on what's happening right now or what's happening in the past. That's not necessarily going to be useful information for you going forward. And so look at what are the factors that affect inflation, right? If we are headed for a recession, then expect interest rates to start dropping, right? So those are the things you want to look at, not what has happened in the past. Now, guys, hope you enjoy the video. I certainly enjoyed making this video. And if you enjoyed it and you feel that someone might enjoy it, please share it with them and follow us on our social media to get updates, Telegram, Facebook, Instagram, you know what. And I will see you in the next video.